This is the voice of June FX. Good morning, good afternoon, and good evening all over the world. Right now, we'll be doing analysis on the Eurnzd. What kind of situation do we expect to see? All right, from the Eurnzd, and we could see that we had this sort of range. All right, we had this sort of range inside of this environment. All right, and there was a range. All right, and we had that range in that environment. All right, market did break out of that range. All right, to the upside. Okay, so what we clearly have at the moment, all right, high that this range is broken. All right, here market open with a gap and took the price out of the range. All right, now what we can also clearly see, all right, that price have indeed made this push. All right, then do this low close. Right, we can go down to line chart, to bar chart, and we could see that this was a very big close. All right, it's a very big close. All right, so from the weekly time frame, what kind of protection are we having from the weekly time frame? One of the things we could identify from the weekly time frame is that we need to start understanding, right, how the market actually started and where we are and where we want to be. All right, we had it that the market actually did this hidden level here. All right, then broke to downside. All right, retest, retest, retest. All right, then make another broke. So the market actually did a 3 wave zigzag. All right, like sort of this. All right, so you can understand that probably if this could be a complex WXY. All right, all right, this could be complex WXY, which could be W, X, Y, and XZ. All right, so that could be a complex WXY. All right, which could take price to at least back up to the correction, all right, of maybe the 61.8 Fibonacci percent. All right, now that is what I expect of the market, because mostly what the market does is actually impulse and also correct. All right, so let's actually start doing this with the real chart, and then let's see what we have. Okay, we're happy that the market have done this complex WXY. All right, we could expect that the market could at least retrace to 61.8 Fibonacci level. All right, from weekly time frame. But what can we also see here? That we could also see that after a breakout of this, all right, market indeed made a push. All right, made a very big statement. All right, here. All right, it did make a very big statement here as to breaking back above this level of support, because if you look at it from a line chart, we will see that this was a level of support. All right, market did break above it strongly. All right, to the upside. All right, so let's go to the daily time frame to see what kind of price action we are having from the daily time frame. For the daily time frame, we currently have it that price, all right, currently sits at a resistance. All right, something that looks like a resistance. All right, so we could not really be drawing any conclusions now, because from last week we had it that price made that strong impulse, all right, to the upside. All right, so we could expect that the market could still be on the way to making another push, all right, to the upside, but we will only be ready to buy this play at the moment, all right, until it does one of the things which we expect to see it to confirm to us. But remember, I spoke about the market possibly wanting to do um, after a complex correction, right? Could want to do some sort of impulse, all right, to correct, all right. So where will we start drawing our lines and conclusions? All right, so we could start drawing from this swing high. All right, okay, let's quickly get this up the way. Okay, we can start drawing a line from a swing high here to a swing low. Okay, let's just align this perfectly. Beautiful. Now, where is our 61.8 Fibonacci level? All right, we can have it that this is a 50% Fibonacci level. All right, and this could be our 61% Fibonacci level. All right, inside of the video. So let's just quickly adjust this quickly to okay. So this whole environment here is where we want to see reasons from the lower time frame to draw a conclusion for a trading action. All right, so we want to draw. So let's go down to the daily again quickly. All right, we will need at least, because if we look at this area looks like a liquidity zone. All right, we had so many price decisions here. All right, so we could expect that price should at least come up into this zone, all right, before we could be ready for the next trading action. All right, so one of the things we could expect will be, one is that the market could come in here between Monday, Tuesday, Wednesday, all right, and we could look to sell, or the market could do a retracement up to this point, and we could look to buy back into that liquidity zone. So that is what I think of the market. And until that happens, we only have to watch the market. We can't sell this pay back to here, because we can't risk the strength, the momentum gathered here, all right, in order to push this market up, could still be there. So we want the market at least to retrace on its own back into this zone. Then we watch out for price action, and we buy this pair aggressively back into the liquidity zone to complete that pattern. Thank you very much. You see the birth of Julian effects. I hope to see you next time. Have a wonderful, wonderful week, and remain pips minded. Bless you.